All right. I hope everybody doing well. I'm not sure when will I be able to upload this. Hopefully as soon as possible. I just really think it's really important, and a lot of people have questions on their mind on what's going on with the market. People are absolutely panicking right now, which is actually kind of funny. To some extent, I do find it a little bit hilarious or amusing that I have to be the voice of reason for the very same people who oftentimes make fun and misunderstand how technical analysis works, but still do find themselves going to these very channels to get confirmation about things or try to understand, figure things out when things are happening. So, as you can see, we have many support and resistance levels. Currently, we are looking at the 6835.36 level. As you can see, quite consistently an important level within the price action. The price action respected this level multiple times. In fact, if we continue going backwards long enough, here it is, you'll be able to quite easily identify how this level actually played a significant role again and again and again. Um, so that's actually the levels that is currently being tested. To be simple, you can see that really happening right now in live. We're currently on a 1 minute time frame, so that's sort of the smallest view you can have, the most zoomed in. Of course, yes, we can go seconds, but that's redundant, really unnecessary. Now, I don't want to talk about short-term sort of behavior, and I want to maybe highlight something that most people are unfamiliar with, and that will require me to switch to a whole different chart. That is also the S&P 500. In fact, that is the source to the price action that we get to see in our day-to-day chart. That is the Oanda contract, basically the continuous contract. I oftentimes use it to present why the price action may behave one way or another, especially in pre-market, post-market hours. That's basically the very contract that we use to identify that behavior. It has its own very similar structure in terms of support and resistance levels, with a slight deviation of maybe $10. The channels are very similar. Everything, in fact, those $10 actually fluctuate. Sometimes they kind of move from about the difference of maybe $1 to $10, nothing that significant. Basically, it's a swap margin, tiny little difference that happens between these two assets. And so, basically, for example, if right now we're seeing 68.38 on the continuous contract, on the regular contract, we're seeing 68.31, basically a gap of about $7 to $8 ish, kinda, right? That is the slight margin between them, but in terms of structure, they are pretty much identical. It's just that the continuous contract really does not like gaps. In fact, the gaps on the regular contract, in a way, of course, that's not the whole picture. In a way, do occur because of what happens in the pre and post market hours in the continuous contract, on the Oanda contract, the one we're looking at right now. And the reason, when everybody else panicked, and I'm going to be the voice of reason for the vast majority of people, is that what most people did not realize is that as we, on the 19th, basically, between the two sessions ago, we actually had a gap generated on the open market right away when the market opened. And so, although the actual gap that we ended up perceiving is the gap that we got on the market open, roughly $100 put together. And currently, that is exactly the gap we're seeing right here above ourselves. That is the exact gap we're seeing right here, right? We can kind of measure it from here to here, roughly about 1.30%, right? Um, the thing with that gap is that and we don't care about, it's not about which portion is made out of what, is that you have to understand that it's probably impossible. I mean, it is possible that we open up another gap. Let's say we close up today, right? The market starts rallying even further to go back. And by the way, I've been saying that all along. Like, this is something we discuss immediately in the community. Those who don't know, I have a huge Discord community and academy and all sorts of wonderful stuff that I will mention later. Links are in the description below. For now, let's continue with this. So immediately when it happened, I highlighted the importance of that event, how that gap on the continuous contract, the very one you can see right here, okay? You see, the market will tend to close that gap. I don't know what's going on with my trading view, why it's lagging so bad on one chart and not on the other. Okay, that's quite interesting what we're getting here. So basically that very gap that we're expecting to see get closed, right? This very gap. Let's close this. I don't know why it's lagging. 7 close. Okay, cool. So this very gap that we're expecting to see get closed, basically, as you can see, I had made an arrow, and I actually pointed this out earlier throughout day to day, earlier when I was discussing it with my community, and yesterday, the day before. And so the idea here is that the market, of course, as I was about to say, the market can open up, can close somewhere around here, let's say. I don't know why it's lagging so bad. I don't know what's going on. Could have closed roughly, let's say, we will close somewhere around here. Gap up through the night, basically have a significant sort of price rally throughout the night, end up getting caught within the very same support resistance levels, just to then retest them, right? And then as we're stuck retesting these levels throughout the morning until the market open. When the market opens up, we will end up again moving throughout, or even, it doesn't matter, we can end up maybe have the market open while we're still on the move. There are plenty of support and resistance levels, intraday minor support and resistance levels that I don't really mark on my chart because they're kind of insignificant. I mark more so the more important, the checkpoints, if you will, and the support and resistance levels that are adjacent to these major support and resistance levels. That way we can kind of tell the volatility that is merely the revolutions of the price action around a particular median, sort of being range bounded to the top of the range. The ranges have ranges within them, kind of a puzzle of big pieces that each piece is made out of smaller pieces, and so on, various degrees inwards, depends on how deep you want to see. So I don't mark anything and everything on my chart, but I do mark the most important things. I'm sorry if I forget and I move things about so much, but I'm trying to make it so that all of you guys can see the price action. Just my screen is very wide, and so I'm trying to make it so I know that not everyone has such wide screens, so I'm trying to make it very, very convenient for everyone. The point being here is that we can end up in a circumstance where we end up on this higher band of the price, while still generating a newer gap, and then having the need to close to fill that gap in, basically having full price action move through the very ranges of the gap itself. The point being that the market, for all I care, it is almost inherently inevitable, the way these assets are set up, the way this mechanism functions, is that this gap is very unlikely to remain. And in fact, I kind of want to make fun of this. I actually spoke about this with my members yesterday in the Patreon members meeting on Discord. I spoke about this, how the options people themselves are the ones who are shooting themselves in the leg and impeding themselves, in that sense that the market makers are actually waiting for their options to expire or for them to capitulate, and only then you'll see that gap get filled in. Why? Because if you think about it, that people were conditioned and now conditioned to think, oh, that every gap gets filled in, and normally, often, quite adjacent to the opening, if not within the first hour, where volatility is its strongest, right? But in reality, what happens is when you come to rely on this, and suddenly it, I don't know, what would be the right word? It just doesn't do what you think, what you expect, because you don't know proper technical analysis, and so you didn't notice the momentum was actually pointing downwards and not meant to close this gap right away. Although, naturally speaking, given how large this gap altogether, and part of it is on the open market hours, it is really uncommon how this behavior happened, and that's what leads me to believe that the market makers are using this as sort of a trap, and basically waiting for certain contracts to simply expire, If it's the zero DTEs, they of course died throughout the night into today. People who hold options for a couple of days and usually strike out, usually the day traders, of course, will capitulate within that time frame, also within a day or two, basically, then giving way for the market makers to take profit via having their options benefit from the price action closing that gap, as their positions were probably in the first place, right? That's the whole trick. It's kind of preventing others from actually accomplishing it with sort of putting enough force to go against them while they are there until they give up, and when they give up, you just take the loot, so to speak, right? Pretty simple, actually. And so, yeah, I've created this diagram that I've described and we spoke about in the community, how I expect this gap to get closed. In fact, if we look at the overall larger channels, if we're looking at the channels that last for days, not just mere hours, not the short-term trader sort of mentality, but those who represent the more weekly and bi-weekly at times price action that I can actually identify that has its own channel, its own median, and subsequently that channel is actually more than wide enough to facilitate and allow us to close that gap. In fact, maybe potentially retest that 69.72, which is the very same support and resistance level that you saw come into play right here many times. Let me zoom in on it so you can see. And that is on the 45 minutes. So guess what? On the 1 minute, it looks a lot more real, if you will, or established, respected. Now, so basically, yes, my thesis stands as it is, and yeah, I know I hate being the voice of reason, and maybe to what will sound as if I'm going against my own people, which this is such a wrong perception of things. I am not bullish nor bearish. I am whatever the market gives me, right? And I'm objective about it. And usually I try to stick to the larger trend simply because that one is more consistent in terms of its overall price behavior and in terms of its profits. It usually requires you to wait a little longer. I know, kind of unpleasant, but the outcome is that I come on top, literally 80% of time. I mean, you can ask my community members. That is something that you acquire through actually, years of experience and knowledge of how the system actually functions. But enough bragging. More so about, let's talk about the price action. Let's look at the momentum right now on the futures contract. Basically, we are on the upper band of the stochastic RSI on the hourly chart, which is significant enough if you think about it. We are actively bearish right now, but we are also actively above 50, and it looks like we're about to have our confluence, convergence, divergence of the forces, allowing our K to be dominant. Basically, the green line representing bullish momentum dominance, which then can easily lead up to the completion of this within several sessions, especially given that we're looking at the 1 hour. Let's look at the 4 hours. That's even nicer. 4 hours is actually breaking through that 50 range. In fact, we see very clear divergence of the forces. In this particular structure, it is very bullish. We're basically bullish on both fronts. We're bullish in the current momentum, and we are penetrating what is considered on the way to overbought territory. This is, of course, the median when we enter the more bullish territory, which is the crossover above the 50. So this is quite indicative of the upcoming sessions being bullish enough to push us above again and kind of correct this entire drop that we had and made a lot of people panic very fast, which I find just hilarious. But I'm not here to do drama nor talk about various, about the finance YouTube sphere and all that crap, simply because I don't do drama. It's just, moronic if you ask me. And yeah. So, more so, what I want to point out, if anything, is that we still are in a downtrend. We still are at that stage where the curvature flattens and the larger trend basically goes from, in fact, what most people don't realize, and that's why I highly advise joining the community and actually going through the academy, which I have just one spot left for, and the rest just go into reserve. I will, of course, soon have more spots. But yeah, the longer you wait, of course, the longer you'll have to wait until these spots become available. I don't onboard more than 10 students ish, kinda. It varies between 8 and 10. I actually have two spots in reserve right now. I'll talk about that in sort of an extent a little bit later. But yeah, I do teach how to read the market. I'm not just here sort of showing off my own skills, but I actually try to make copies of my own self by having an academy and teaching people how to use these tools, why to use these tools, at what times, what are the trends like, what are the cycles like, why, what is the structure like, how to use the momentum tools, other tools that you don't get me you don't you don't see you don't get to see me using on the daily basis. I very rarely use them. I just use them within the context of the academy. Rarely that I kind of expose that to people who are not in the academy. It's not just because of sort of having a paywall. It is literally not going to be understood. You have to have some framework and frame of reference to understand what it is that I'm using these tools for, and they're a little bit more sophisticated. And so, to the average, to the uninitiated person, what it will do is simply discombobulate them to the point where they'll get analysis paralysis right away, will not understand really what they're looking at, lose faith and trust within the whole system, while it didn't become less true because they did not understand it. It's the same thing as if you don't understand gravity, it does not make it stop affecting you, right? It doesn't not exist because you don't understand it. I kind of make fun of people who go against technical analysis by force, like literally put effort into saying bad things about technical analysis. Those are the flat earthers of the finance world, if you ask me, like literally. And it's just hilarious. Like, I can rant about this for hours on end, but this is not what it's all about. So the point being, I think it's pretty clear. And yes, I can show off how we still are in this bearish structure, how we are about to overturn. In fact, by the way, those who do not realize, on the continuous contract, right, on the futures, we already have overturned quite significantly in comparison, for example, to our regular day-to-day contract, which, by the way, here it is. It has overturned as well. There we go. We actually are technically gone bearish on our monthly chart, which we had our convergence, if you will, the confluence of the forces. Now D's dominant, and that representation of that moving average, that one superimposed over a fast moving average, we get to identify where the momentum, where that bullish momentum, which is more day to day, more fast, if you will, starts to lose grip, and we overturn to that slower moving momentum, which is our downwards pressure, our bearish pressure, which I was highlighting all along. And those who are, of course, to the uninitiated, that's going to be like, look, this is evidence that the market's going to go up. If the market been going up, then it means it's going to go up. No, it just means you know nothing. It just means you don't understand the context of the structure, why the structure works, what is the cycle, how the forces affect the market, which top matters, when, why, what support is going to be broken, when, nothing. You are literally blind as a freaking bat. In fact, just to kind of put ourselves in between that hourly time frame that is indicative of the closure of the gap, just to look at the daily, we are actually very bearish objectively. That means we can, within the confines of the hourly time frame, basically within the following sessions, close this gap very rapidly and then continue downwards, which is exactly what I pointed out on my Discord. If I will, in a second, that is literally something by the way, those who don't know, I have a huge community on Discord where it's of course all relative, tiny, to each their own, where I post various posts every day. I post pictures of my charts. We have the Academy, of course, as a major portion of. I share my portfolio. I talk about various news that come out, sort of things that are relevant for us that I find myself interesting. Of course, we have voice channels, the one-on-one channel, the testimonials channel, which is most important, where you can read testimonials about how my academy works. Here, I'm going to brag again. Leo, you're a goddamn beautiful legend. This is one of my members who learned technical analysis, and then using technical analysis while trading options, although I do not advocate for options, within 31 days was able to generate roughly about $190,000 in profit, right? Of course, he didn't do it with $100 nor 1,000. We all understand that, right? We have various comments from various students. Some of them are better than others. That's life, it is what it is. No one gives you any guarantee that you'll go through the academy and you'll become the best trader on the planet, nor the best investor. Merely what I can tell you that it will allow you to do is read the market. If you'll put the efforts and the time, you will be able to read the various assets and understand how they function. Now, if you do want to join the community, it is done via this way. You will need to go to patreon.com/investory. There you'll find the various you'll find this wonderful, beautiful thing you're seeing right now, right? This is the channel, which, by the way, has various articles, but those articles are meant for the Academy members. It kind of goes adjacent with the lessons, right? They accommodate various lessons. You can buy the Academy separately at $3,500. You can also go through the proper Academy one-on-one where I'm gonna actually teach you. On the Discord, we're gonna share screens. You're gonna see my screen, my trading view. I'll explain. I'll guide you through the processes. Now, the memberships are kind of complicated. This one is not meant for anyone. This is more of it's something, you know what, just ignore it. Bar this. This is not the way to sign up to the one-on-one. It's more of a tier that actually is, I mean, nobody's going to pay $1,000 a month having sort of this being stretched out for a long time. This is on purpose this way. This is actually a tier that the Academy members get gifted to them. This is the Open Academy. This is sort of a very slow version. It's limited for only 20 people, by the way. So, yeah. I don't really recommend you go with this tier either. What you should do is sign up at the basic tier, which now is tremendously discounted. This tier is a $100 tier right now. It's 70% discounted. In fact, you can get even a further discount, $24 if you pay annually, basically right away. This tier will allow you to join the Discord, see the various channels, participate in a meeting once a month where I break down the upcoming expectation quite in depth, answer questions. Of course, we do it via sharing screen. I answer questions, we analyze stocks, we talk about events, and all that beautiful stuff. So yeah, but if you want to join the Academy, you don't do it this way. How you do it, you go to the Discord right away, straight to the Discord. Then you will be met with these two channels. Then the sort of the left click me, which introduces the Discord altogether, tells you how to connect your accounts and all sorts of important stuff for the Discord to understand who you are. But then you can also go to Need Help right here, which you will have access to. You'll have access only to these two channels unless you're a Patreon member. And then via pressing this Academy application, you'll be able to apply to the Academy or just get general support if you need help with accessing the Discord because you're already a member but struggling to access it. Right? Do not stay in limbo right here for a long time. Simply sort of in between the worlds. That means you'll simply get kicked after a week or so. I don't remember for how long I said the bot too. Yes, we have our meetings that some of them will be just the other one we had the other day, by the way, just the other day. Today, later on, we're going to have another meeting. Probably by the time you get to see this, I'm already within the meeting with my Academy members. Announcements, where I talk about how. So I give various announcements about important things and whatnot. Of course, the various channels where you can find the archive of the videos of the various meetings. Depending on your tier, you'll have it open relatively. And the Academy, of course, is open only for the Academy members. So, yeah, you'll be mostly segregated to this partition, to the Patreon member. If you join, I see people are writing stuff there. I'll check this out in a minute. So yeah, if you want to become a member of the community, learn a whole skill that will allow you to actually read the market, not be confused about why the market is doing what it's doing and run around like a headless chicken, then I'm the right place for you, right? I do not take people, I literally remove people who do not take the whole thing very seriously. I don't think that this is a big boy, big girl market type of deal, and if you cannot treat this seriously and devote time to learning and understanding, then I'm not the right place for you. This community is not the right place for you. On the other hand, if you really want to understand how the support and resistance levels are derived, how can we know, how are they so accurate, how is the momentum working, how it all correlates to this sort of structure-like thing, the cyclicality that is far larger and far more complex than people realize. And no, basically the idea is very simple. I give you the dots, I show you how to connect them, and it's very simple because if you don't have the dots, you simply cannot connect them. You cannot see the broader picture if you cannot have the dots, so to speak, right, to connect them and to see the broader picture subsequently. I do all these things in my one-on-one academy, one-on-one properly, or of course you can buy the collection and then try figuring it out on your own while having all the written material of the academy in front of you through Patreon. I do not recommend you do that simply because the academy costs 4,000 and the collection costs 3,500. That is it, boys and girls. That's all I wanted to say. I do have a lot more to say, but most of it is being said in the community. There's a reason for it. I am not here to give out signals. This is not financial advice. Especially for the uninitiated, this is basically like I am speaking Chinese. So do not interpret what I'm saying. Do some crazy shit and then come crying. I don't care for that. Okay, so I care for serious people who really want to learn the technical analysis skill. And yeah, that's it, boys and girls. Hopefully, I'll see you in the community. That's all I had to say. I really hate being the voice of reason for the very same people who misunderstand and mock this and call this, black magic and rain dance and all that crap. You guys are a disgrace to humanity, honestly, right? The people who say that, right? Not to get confused. The guys who, I'm not talking to anyone else. I'm talking particularly to the people who I know haters will come and watch. Sadly, probably not to that stage, unfortunately. They will watch 4 seconds and go complain in the comments below, which by the way brings me to my next point. If you stayed here all along for this time, go to the comments, comment what you think, good, bad, I don't care. Just don't be rude. You can say I'm wrong in a polite way, okay? You can say, in fact, you can say I'm an idiot in a polite way, That's not the game here. We are more so here about the stock market. It's not a competition. But yeah, sure, if you have, you want to share an opinion or say something about this video, smash the like, dislike if you didn't like what I said here, whatever. I really don't care. None of it matters. I'm shadow banned on YouTube anyways. So yeah, see you on the next one. Bye bye.